India has had an unhappy relationship with its MNCs. MNCs have never been trusted and had to live in India with great restrictions. In 1977, when a socialist Janata Party took over, things were made even more difficult. Most MNCs exited India, notably Coca-Cola and IBM. To be in India, they had to mandatorily list. A handful of pharma companies and FMCG companies did list in India. Over a period of time, after 91 reforms, these companies slowly increased their holding to a point where they took complete control of their Indian operations. The notable exception being ITC, whose independent management pushed back the foreign investor BAT. But it has been a long sore point that Indian investors have not been able to profit from global companies. About 7 years back, at the fag end of his second term, the Manmohan Singh government decided to give foreign companies, big brands and foreign, a chance to raise money in India and list their stocks in Indian stock markets. At that time, this was thought to be a great move. This would help Indian investors to own stocks in Indian rupees that did global deals. The first company to list such was Standard Chartered, a very aggressive bank in India. Standard Chartered had a bad experience in the 90s. It had shrugged off and invested big in India. It was one of the leading foreign-owned Indian private sector banks, giving out credit cards and loans. It had even shrugged off the 2008 crisis. It raised 2,500 crores, the money it really didn't need, but just wanted to give a listing in India. It was the third market that Standard Chartered listed. After India, before India, it was listed in London and Hong Kong. But heavy restrictions by SEBI made sure that India depository receipts were always trading at a discount to the English peers listed in the London Stock Exchange. The procedures were cumbersome, and over a period of time, the Standard Chartered India DIR just lost value, and the discount between the actual stock price in London and the India depository receipt got bigger and bigger. Finally, a point has now come when Standard Chartered has decided to delist from the National Stock Exchange and close down its IDR. Most of the problems lay at the hands of SEBI, whose disclosure norms and procedures were cumbersome. The loser is the Indian investor, who did not get an exposure to global markets. Such ham-handed methods have meant that Indian investors, HNIs, have gradually taken money out to the LRS scheme and invested abroad. It's high time, if India wants to integrate with its global market, then Indian investors must be allowed to invest in global stocks in an easy way. Today, the cumbersome process means only the HNI is able to invest in foreign stocks. This has to change. Simply talking about ease of business will not solve the problem. We have to really make it easy for foreigners to list in India. Thank you for watching Berich. If you like this video, hit the like button and turn on the bell notification. We have given you a WhatsApp number. You may send your details in it if you are interested in buying my books. At the very end, if you are interested in consulting with me, kindly send a mail to berichenglish@gmail.com. Once again, I thank you for supporting Berich.